So, what we have, as usual, as every live analysis, we're gonna go through what's going on, what is expected to happen, what important data and news and politics and etc. We should really monitor, and in general, having some live analysis, fundamental one and technical one as well. So, as usual, feel free to ask anything you want, either below in the comments box below YouTube channel or Telegram or Facebook and etc. I'll see your questions and I will reply on spot. So let's, before I share my screen, just actually, I'm gonna share my screen as well. So here we are. Just to see where we're standing, I'm gonna turn to dollar and start with the dollar, which has been anyway in a downtrend for more than 2 weeks now. But let's see what's going on currently into the market. So what we have seen over here, as you can see, is dollar reversing significantly since yesterday from the highs of one should be, I think it's 102.66. It was the high that we have seen earlier this week, but we have seen a big reversal, I mean, yeah, significant reversal in the Asia session and in the European session this morning. And everything has to do more or less with the risk appetite. Yields are moving up from lows. Stock markets stabilize a bit, but remains in a really negative territory, and that's why we have seen dollar index and dollar basket, as we call it, drifting and posting a low at 101.70. So just briefly, okay, just briefly as an intro before we start the technicals, please tell us about euro dollar. Yes, give me just a second to just summarize what's going on. And don't forget that in 7 minutes, my dear Forex trader, we're going to have the preliminary numbers from GDP from the United States, initial jobless claims, and important, even though it's a weekly data, it's really important because next week we have also the NFP. So it would be interesting to see whether we're going to have any surprise or not. And the very important indicator called PCE is one of the most favorable ones from Fed, even though tomorrow is just the personal consumption, the preliminary personal consumption for the first quarter. So tomorrow it should be the core personal consumption expenditure. But yeah, still a very significant data expected in 7 minutes from now. So let me summarize as I was telling you. What we have, really mixed situation in the equity market. So bonds stabilize a bit, sideways a bit. The long dated treasuries, European yields, I'm not referring only to the US one, European ones as well, higher. And a steepened curve, we could say. So what that means, it means it's clearly presenting that risk appetite remains, it still hold. And why is that? This is because of the FOMC minutes yesterday night. Even though the stocks, they have looked to relieved, from the FOMC minutes. However, the FOMC minutes, they just repeated what it was already being stated last week. So, okay, it was less hawkish. It wasn't more hawkish than what was expected. Actually, it came in line with expectation, but they still did the expected. They still FOMC, the Fed members, Mr. Powell, they were largely as we expected. They stated again, they confirmed pretty much the 50 points rate hike in June and July, committed to remain to hold this tightening of the same policy stance in general. So there was the hawkish tone that we were anyway expecting and pricing in, but it wasn't more hawkish than what was expected. So Uh, so yeah, the same hawkish tone, similar to the May meeting. So said that the most they could move is 50 points in the next couple of meetings. Uh, they once again confirmed that the current policy is the appropriate one. And that was pretty much logical because the outlook, the economic data hasn't really gave any hopes, any relief marks yet. We still have the uncertainty of the world. We still have the COVID lockdown in China, which actually impacts the rest of the world, the demand for the rest of the world. We still have inflation rising, hasn't steady yet, keep rising. So it is what it is. I mean, they will remain committed to the tightening policy. They will remain committed to make any policy adjustment based on the economic development. They will keep an eye on the jobs. They will keep an eye on the consumption and etc. So that wasn't a surprise, but yes, still we have seen due to the risk appetite, as I mentioned, due to the sentiment, the dollar depreciating, and along with that, we have seen treasury yields, the short-term ones, um, declining. Okay, the same stands for the Europe, for UK. So gilt also. So sorry, it was vice versa. So the European ones moved higher with gilt and bond at 1.95% and 0.97% respectively. So yeah, the whole picture is what I just mentioned. Uh, some gains in the stock markets, not significant one. They are stabilized on some kind of a floor. We're gonna see everything in a minute. Nasdaq, Dow Jones, USA 500, DAX, FTSE, Canadian 40, Nikkei. They have all stabilized a bit. They are like consolidating a bit, but the overall picture remains negative. Um, so the data are not out yet, so I will just let me check your questions. Dollar CAD, euro dollar. Okay. Gold. I have seen your questions. I want you just to be a bit patient, just to cover also the data. Actually, we have 2 minutes still. Okay, let's scan a bit the markets. Dollar index, um, a small, a short term down channel as we have seen since yesterday morning. It remains in track within the downwards channel. This is the 1 hour chart. Bounce the last hour and a half on the ahead of the data, we could say. Okay, but still in this channel. Oops, my bad. Sorry, just probably set it perfect. Key resistance at 102.30. Let's wait and see. So dollar found some floor the last hour, but remains, as you can see, in the lows that we have seen this week. So we have, this is a daily chart, actually this is a weekly chart. We have seen a reversal since last week, a reversal of all the gains that we have seen in May. Okay, so okay, questions keep coming. That is a very important support in the dollar index, and this is the 50-day moving average. Let me get rid of some of the lines over here because I want to show you how important the 50-day moving average is. If I zoom out, you can see that 50-day moving average is supporting this upwards trend since May last year, for more than a year. Okay, so that's why this is exponential one. Even if I put the simple one, no, exponential is much better as it seems. So I was saying it supports the asset for nearly a year now. So that it might explain from technical perspective why this decline is struggling to extend further lower. So 50-day moving average is a very important support level, because if it breaks, okay, considering that it has supporting the dollar pretty well, okay, uh, any breakout below that level could open the doors to 99 or even 97 territory, okay? So yeah, very important support level. Sorry. Even though the fundamentals, the increasing interest rates are supporting the dollar, sorry, however, we have seen this pullback of dollar for the past 2 weeks. Oh, yeah. So just the data are out. So let's go through the data, and then we'll get back to fundamentally and technically analyzing the pairs that you taught me, that you want me to um, analyze. Just the key thing at this moment is that don't forget that the decline of the dollar the last 2 weeks, it has been triggered to some disappointing US data. I'm reminding you that US, it was the only one that was showing a recovery, but the recovery is now a question mark, because after the GDP number, the latest GDP number, the inflation, the rising inflation number that we got 2 weeks ago, the also the wages that they detected as well, and the unemployment of the last month that disappointed. So and that the economic data lately are disappointing the market. That's why we've seen this reversal of dollar. And yesterday as well, durable goods, yes, they were like they show growth, but very, very tiny growth. So the durable goods were much smaller than what was expected. So that's clearly showing the impact of the supply chain disruption, the rising inflation, and etc. Obviously, people are not happy buying stuff. Uh, Expensive stuff, so they prefer to buy less. That's why we've seen this detection, significant detection. So yeah, let's actually go through. Let me share the calendar. As you can see over here, guys, the data are out. So let's quickly see. Initial jobless claims detected a bit. So still, the 200 is not a very hopeful number. Okay, so 200,000 jobless claims this week, below expectation, below last week's reading, but not significantly low, just slightly lower. So the fact that we have another 200,000 jobless claims this week is not like positive number ahead of the NFP next week. GDP growth, that's the preliminary number anyway. So we need to wait and see at 8.1% for the first quarter. The annualized one dropped at 1.5%. Preliminary PC 7% and core at 5.1. So it's a pretty. It's not a positive report, I would say. Okay, not a positive report. Retail sales from Canada increased. That's positive. They grow in March. That's March reading. Let me share back my MT5. Sorry, that's MT5. Perfect. I'm seeing your comments. Don't worry. So when we're having, yeah, in general, the data, I'm afraid, are a bit disappointing. So I will go down to the 30 minutes chart of dollar index to see whether this bounce will be sustained, even though based on the data, this looks unlikely. Just a quick reminder that for the time being, so far today, the stronger currency, it has been euro, while the weakest it has been kiwi against the dollar index, obviously. So yeah, the data are not promising at all. They are a bit disappointing, to be honest. Yeah, the jobless claims as well, higher from the lower watermark from the cycle, are still near very low levels. Continuing claims. Okay, so yeah, they are seasonally adjusted indeed, but still a really high number for jobless claims. While the GDP, let me just see whether I can find the breakout of GDP, even though it's a preliminary number. The first reading was at 0. So a negative 1.4%. Deflator 8.1, PCE 5.1. Yeah, so it's a very mixed GDP number. Home investments decline, inventories decline, personal consumption slightly higher, private investments slightly higher, government spending in contraction. So very mixed with conditions. That is unlikely. That's a bit negative report from US that could add pressure on the dollar if we consider that it's a bit disappointing. So I will get back to your questions, okay, since the data are out. So let's start. First come, first served. It was a forex trader over here. Hello, ma'am. I'm come from India. Please tell about euro dollar. Of course, as I said, euro has been one of the gainers so far today. So actually, since yesterday, because it was this is 1 hour chart, by the way, because of this short term up channel that appreciate that boosted euro dollar to 107 territory from the 106 over here, 106.40. So it's in up a channel. Now, if I focus a bit just on the 1 hour chart, on the very short time frame, what we are getting, let me zoom in a bit. So we had a nice bounce in the European Open. And that, sorry. We had a nice bounce on the European Open over here. That's yeah, it was lifted. That was just something that they got a boost from the ECB members that they actually stated that they will remain committed to lift off on rates in July. So that commitment is what has pushed temporarily the euro. But let's not forget that the European the ECB is still at 0.5% interest rate, so very very low compared to dollar, compared to US. So, but anyway, that was what supported the euro, topping at the peak of at the uptrend of my channel at 107 and reversed right now significantly. So what we're having over here is a flat. This is actually reversal of the moving average, but they haven't bearishly crossed. Let me get to the 30 minutes chart. So yeah, 1, 2, 3, and now in the fourth session to the downside in this 30 minutes chart. You see the moving average, the fast moving average, this is a 5 and 9 exponential moving average, they have not confirmed a bearish cross yet. So MACD is still negative, stochastic sure, turning lower and pointing lower. RSI is at 50, hasn't broke it yet. So it's pretty much a wait and see stance until we have a bearish signal, because we need to see either the moving average turning and the bearishly cross along with RSI and stochastic over here in order to suggest that it will turn down and retest this down, this lower line of the channel at 1.067580, somewhere there. So the support obviously is here. Let me extend my channel. Fill. Oh no, sorry, my bad. Don't fill right to the right. Yeah, should be. Yeah. So this is the support level if we got the confirmation that it will extend further to the downside. Okay. On the flip side, however, if it managed to sustain a support around the 20-day or 20 period moving average, then it could get back to 107.27 territory. So remains in an up channel. Let's get to the 4-hour or even daily chart. Okay, so what we have over here, let me get rid of some of this lines over here. We are forex trader. Let me get rid of those because I want to show you, I want to see where we're standing. This is the daily chart. So we had a nice bounce, okay, nice bounce, recovering more than 38% of the last month's decline, but as you can see, remains below the mid area of this down leg, of this latest down leg. Okay, so this is a very important resistance level, guys. Look at that. It coincides with the 50 period moving average, so 50 Fibonacci level. Okay, I have just plotted on the latest down leg. So it coincides with the 50% Fibonacci level, so the mid area of this decline, coincides with the 50-day moving average, coincides with Bollinger's, the upper Bollinger line as well, okay, and coincides with this floor over here that it was seen in the mid of April, and it held for nearly 2 weeks. So this 10758 level is a very important resistance level, because if it breaks, the asset managed to break and close its daily candle either today or tomorrow or in next week. So if it closes above it, that could trigger the attention to 108.60, so another nearly 100 pips higher, or even the 110 territory. So keep an eye on this area. On the flip side now, a move below the 106.40, which is our immediate support level. Why? Because it was yesterday's lows, so we have a relative low over here, coinciding with a break below the 38.2 Fibonacci level, and also it was the previous resistance that lasted for a month and turned now into support. Okay, so these are two important resistance support levels in the daily chart that will give you a clues on regards to the direction of the euro dollar in the next few days or even weeks. Okay, so let me zoom out a bit. Yeah, up. What we have over here is a bit of a recovery. It was in some kind. Oh, sorry. Let me just double check whether there is anything that I have missed. Down. Oh, That's the 4-hour chart, by the way, just to follow what I'm doing. Come on. Here, here. So it looked like, sorry, I need to connect the fractals. It was like a descending triangle and is now retesting it. Interesting, because if it managed to break above it, if it managed to break it and extend, yeah, that would be the next resistance area, the 107.58. So around 60 pips higher. So hopefully I managed to fully reply to cover the people that were asking about euro dollar. Uh, Money mining. I could change it, even though that's my template. Let's see whether I have a brighter background. I don't have in this PC, I'm afraid. No. I'm used to the black, to be honest, but I do understand that it might struggle you. I'll try to put a note in order to. No, I don't have a bright template. I'm afraid. Sorry. Oh, okay. I promise. I'm gonna put a note in order next time to have some white charts as well. So let's move on to the next questions. Just, I need my pillow for my back. Now I feel better. Oh, much better. So, yeah, dollar cap. Yes, of course. We had the retail sales, and actually there was a good number out. They were providing, actually suggesting growth, but it was for March. So we're already into May, into the end of May. So the fact that Canada has released the retail sales for March. It's like 2 months, so it's backdated. So that could explain why dollar cat hasn't moved a lot, because they are backdated data. Even though the retail sales were positive, suggesting some kind of a recovery, not recovery, growth on the imports and exports for Canada, it's backdated. It's from March. So that explains, my dear Diana, why we don't have a significant move in this dollar cap. But regardless of that, okay, let me start with the daily chart. Okay, I'm gonna keep that. I don't want this one, but I want you to really focus over here to what's going on. We have been in a downtrend, but it seems that the asset is sustaining some nice floor over here. So is it ready to do some kind of a rounding bottom, cup and handle? Who knows? But for sure, the last 2 weeks, it found the floor. Okay, found the floor, and the momentum also remains positive. You can see stochastic are growing, RSI as steady for more than 2 weeks now at 50 territory. MACD, regardless of the decrease that we have seen over here, remains positive. The fact that it hasn't extended losses, posting lower lows and lower lows, but instead bounce, possibly benefited by the increase in oil price as well. So that keeps the dollar cap in the overall picture, in the medium term picture, sideways. Okay? Key support and resistance areas are the latest bottom, 127.60, and the 129 number, round number. Okay, so these are key support and resistance levels. But as you can see, the Bollingers have flattened, right? Bollingers have flattened. Let me just zoom out a bit, indicating that it's entering some kind of a ranging market. consolidation. So yeah, we might see bouncing between the support and resistance level. Let's see what's going on. Yeah, here this is a 4 hour chart. So since 17th of May, so that was last Thursday, Tuesday, Wednesday, was it? Yeah, I think it was last. I'm confused. When did we have 17, 16? Yeah, since last week, since last Monday to be more precise, it has stuck between 127.60 and 129 level. So you can see it's bouncing away from the lows, reversing pullback away from the high. So it's bouncing. So whatever you want to do with dollar cat, it should be in line with whatever strategy you want to apply should be in line with this consolidation, this ranging market that we have seen. Let's go down to the 1 or even 30 minutes chart just to see what's going on over there intraday. So fast moving average flatten, appreciated bit, unable to break the 20 period moving average. MACD is negative, but it's very, very close to zero, clearly stating indecision. RSI at 48, no particular direction is being presented. The only one that is showing some kind of a positive signal is stochastic. A bullish crossover here is keep pointing higher, but the slope of stochastic is a bit weak, it's not sharp. So there is a lack of momentum to the upside. So a break of these latest up fractals, up these latest double highs at 128.30, closure of the 30 minutes candle above it could retest this 128.40 area. Okay, but in general, very neutral, very neutral um, asset. And that's quite and that's in line with oil as well, okay, because we have seen lately oil. I will put the daily chart, okay, on just to show you this latest. We'll zoom in. This is 1, 2, 3, 4, 5. This is the oil the last 5 days. Can you see how weak these candles are? How they're doji candles, small body candles, directional asset. So oil overall remains supported, obviously remains supported from all the things that are going on. I mean, from the policies, from the lack of demand, the supply that hasn't significantly changed, the embargo that's going on between the West and Russia, the Hungary that is putting a veto. So all these support the energy, so support oil, but is finding some kind of a resistance as well. Sorry, excuse me. Um, we have some kind of as I said, a resistance over here due to the first of all, due to the fact that Hungary is the only one that is still, it hasn't put a veto to Europe. And the other thing is that it's on the reopening of China. So the reopening of China will mean that demand will be back on track. So that is what putting some kind of a ceiling to the appreciation of oil. But overall, remains to the highest territory seen the last, I don't know how, the last, I mean, to the highs of nearly 10 years, to the highs of last 10 years, forming like something like, let me just, like an ascending triangle. If I just, let me see whether I can draw it properly. Sorry, no. So here is how we are here. Okay. Oh, sorry guys. So up. There we are. Looks like an ascending triangle, and in the long term, and a channel the last 2 months. But you see, it has stuck. I will zoom in. Can you see that it has stuck on the middle of this trend? There is nothing really to trigger our attention over here unless it gets direction. It gets a direction. For the time being, this direction is stuck. Appreciated, yes, appreciated, but um, unable to make clear whether it will extend gains or whether it will retest once again this 105 territory. Intraday now, we had a bounce, extending, and posted the latest high for the day at 111.44. A bit of a pullback on the US Open just now. Um, but still, regardless of this long tail, can you see this long tail? Regardless of this long tail, the asset quickly turned up to the opening price. That suggests that the bulls are really gaining the control over the bears, because the bears pushed the price lower, indeed, but the bulls took it back to the close to the opening price. So there is more of a bullish control than a bearish control, more buyers than sellers. Obviously, the latest high is at 111.42 is the very short, the very near term resistance, and a break of it could, sorry, it could actually retest this week's highs at 111.90. Okay, so let's wait and see. Let's wait and see how this candle will close. Let me get back to the 30-minute chart to see whether I have any further information. So yeah, turn down, quickly reversal, moving average are clashing right now. So we don't not really sure whether they will start appreciate or decline. They're like clashing. So we need to wait a bit until this is until the moving average confirms the appreciation or whether it will bearish close. But considering how the candlesticks behave, the positive MACD, the positive crossing in stochastic, and the fact that that SI remains above 50 for 2 days in a row, there is more bullish momentum than bearish. Okay, so let's shift on gold. Yep, gold was a key mover this week, very significant mover this week, because we had a nice, a significant bounce, which looks to run out of steam. There it is, reversing from the 1870 high down to 1842, coming back below the 20-day moving average, and consider that it has been anyway to the downside for the whole year. There was some kind of a pullback and a correction, but we had a sharp selling on the April, May, a bounce, as you can see in the last week, but gold apparently ran out of steam. We had a very important weekly gain over here, 2 weeks gains over here, and it was what was responsible for this boost was the safe haven status. That was it. That was pretty much it. It was a safe haven status that gold is having. That's why it moved higher. It was a reaction as the markets were expecting the FOMC minutes and the Fed on Wednesday. So that's why this was a safe haven appreciation. But now that the FOMC is out of the way, confirming again what was anyway expected, we have seen the gold turning back down uh, uh, below the 20-day moving average. MACD negative, RSI is turning lower, stochastic turning lower as well. The asset failed to break the 1817, failed to move above the 50-day moving average. So yeah, gold is back on the back under pressure. Benefited for 2 weeks, nearly 2 weeks on from the safe haven flows, but that was in contrast with the correction in bond yields. So now is moving along with the yields. So failed to move further higher, and now is in line with the yields, turning down. Sorry. And the next, let me zoom in a bit. So support for gold, if it confirms today the extension below yesterday's low, if today we have a fresh, uh, a new lower low, then the support area is pretty much down to over here at 1800s or even below that for gold. So, and that will be in line with fundamentals, will be in line with the higher interest rates, in line with the yields. Um, so yeah, so right now, what you should monitor is the asset, whether the asset today will close below yesterday's low, so below the 1840 territory. Okay, because a move and a closure below that, it could open the doors to so here it's a nice resist support level, so that could open the doors over here to the 1800 territory. uh, I wanted to add something more about it, uh, but it was okay. Any questions actually, let's do 1 hour chart as well. So this is the 1 hour chart in gold. I'm not sure whether there is something to mention over here. We can see a descending triangle. Actually, yeah, it is a descending triangle. Okay, support is at 1842. Lower lows, lower highs, lower highs below 50-20 period moving average, with the fast moving average clearly pointing further to the downside. MACD negative, RSI below 50, stochastic failing to cross above 50 or even point high. It doesn't point higher, so there is a lot of selling pressure on gold. So next support level intraday is the 1837 once it breaks the 1842. So remains to the downside, descending triangle. With a break of this descending triangle, the next immediate support level is at 1837. If that breaks, then the very next one will be between 1831, which is this latest low, and the 50 period moving average. So hopefully I covered the gold requests. Was one, oops, was this one, this one. Luna Park. I'm sorry to hear that, dear. Super parrot. Sorry, it's my setup. I used to it, and it's okay. I understand that it might be confusing for you. I'm sorry. I'm sorry. Each one of us has different setup. I agree. This might be a bit confusing. I will try next time to have some white charts. USA 30 and USA 100. Let's see. Let's see. Let's start with the USA 100. Anyway, as I mentioned, stocks have been in a sharp decline. That's obvious. That has to do with the interest rates. Just to remind you, if a country increase the interest rates and the tightens its policy, that's negative for stocks, because that means that um, it makes the companies, people to invest in companies, in stocks, less attractive. So that's why the stocks are under pressure, and instead it makes bonds, governmental bonds, more attractive because they will give higher returns. That's why we have this decline in general in the equity market, in the stock market. But the last 6 days, they found a floor, like so the equity market, the last few days, it's consolidating, but the long the overall picture remains negative. Can you see? Remains to the downside, remains in a downwards channel below the 50, 200. The moving averages, all moving averages are pointing lower. MACD is aggressively negative. So in general, there is nothing yet that will point out that the equity market in general, not referring only to the USA 100 and USA 30, there is nothing yet to signal that it will recover, either from a fundamental perspective or a technical perspective. Now, from a technical perspective, daily, okay, 1200, 12,000 are our key resistance level, round number, 1, 2, 3, 4, 5, nearly 6 days resistance. But actually, a more significant resistance level would be over here. 1, 2, 3, 4, 5, 6, it tested 6 times and is above the 20 period moving average as well. While the floor at 11, let me put the floor properly, the floor is at 11,490, so 11,500, just to round it up. It's our support level. A break of that could open the doors further to the downside, and I need to put the monthly chart just to find a support level. So a break below that could open the doors to 10,600 and the 50-week moving average, monthly average. So that would be the long-term support level if the asset extends losses below the latest low at 11,496. Intraday now, let's move on to the 1 hour chart. Let me get rid of this. So where are we up to right now? This is a 4 hour chart, as you can see, has filled this gap already. But let me just put my setup. Where the intraday setup, what we have over here. What do we have over here? Triangle, consolidating, fast MAs are flattened, supported by 2050, which are pointing higher, is in an ascending triangle. Positive momentum indicators, but the flattened moving averages are like suggesting like that we should wait and see. Will it break the channel downwards? Will it bounce? Yeah, neutral intraday picture, I'm afraid, dear Tepo. You ask also for the Dow Jones. Let me open where's my Dow Jones? Yeah, here it is. Oops, sorry. Here we are. Different picture intraday because here we have let me just sorry. We can see over here in Dow Jones that It remains in track with its uptrend channel. Oh, okay. Very tight channel, but you can see the fast moving average are keep pointing higher. We might see a bullish crossover here of the 20 with 50. MACD is positive, RSI is positive, stochastic is positive. It keeps posting higher highs, so there is quite a well supported, quite a support on the USA 30 on the Dow Jones, which has managed to recover more than 70% of the losses that we have seen last week. So the next resistance area for the asset is up here at the 32,700 territory. So what have I missed? So, I know, you are absolutely right. It's because okay, we are analysts. I mean, we are composing articles, so I need to also mention the long-term view, the medium outlook, but also the short-term outlook. So I need to also have a template for intraday analysis, 1 hour chart, 30-minute chart. But I also need another template for daily and weekly chart. That's the only reason. As I keep saying in my webinars, don't overcomplicate it. And I'm overcomplicated right now, but because it's my job. Usually, what I keep is just a single indicator over here. Usually, it's either MACD or RSI. Okay, one of, but yeah, it's I'm doing analysis. That's why I'm really sorry for that. Okay, it's not 10 indicators. Come on, you're a bit for this because now, okay, Buddy, I'm not sure whether you are still here. Anyway, because it's in your social media and YouTube and Facebook, even if I'm done, can I end the stream? The video will be still there. So don't worry, go to work. You can watch it afterwards, okay? Guys, I'm not sure. I think I covered everything. We might go back to US oil to be honest, just to cover a bit more fundamental. Oh, we had a break of 111.40 over here. What's going on? Let's see. Okay. Sorry. Oh my god. Just for my defense, my super para, my defense in this PC, both me and Stuart are doing our analysis. So some of those lines are Stuart's, some are mine from last week. So that's why it's getting a bit messy. Oh, but you're right. Clear a bit this mess. So what we are having over here, some appreciation actually of US oil. So will it or will not break the very, very latest resistance at 112? So very important over here, guys, very important. Because it will alert and it will take the dollar. Can you see how tight, narrow this, how tight, narrow these Bollinger Bands are, clearly stating consolidation in directional US oil. But the break of 112 significantly, I don't mean just to touch it, I mean a strong body bullish candle closing above it, it could open the doors to 114 or even 115 territory. So at this line on, at 112 on, it's a round number, is the latest high, and will imply to a breakout of the range that we have seen the last 5 days, and it could open the doors further to the upside. So in regards to the oil, what I wanted to add in regards to the analysis last week, just to explain a bit why it's so sideways. Okay, so we have the underpinning demand, okay, which supports the oil. From the other side, which have China's COVID situation, which remains in place, remains in focus, and we are waiting for the reopening on June 1st. So that would be next Tuesday, next Wednesday. That's the thing that is adding a ceiling, because the reopening on the 1st of June of Shanghai will bring back the demand. Okay, China is one of the biggest consumers, along with the US, or the biggest buyers of oil. So if it opens, if it's back in full function, that will mean that they will buy more and more oil in order to continue their businesses, manufacturing, and etc., their services. So that could pressure the oil. From the other side, what supports the oil is things that you already know. Is the same things that they support the oil for the last this year particularly, is the situation, Ukrainian war, Russia, embargo between US, Russia, Europe, and Russia. Um, Also, um, uh, the recession risk that we are, is not a risk anymore, but it's a reality, is the recession of the global economy. Okay. So, and also, if Europe reduces oil imports from Russia, it will not be easy for the global oil markets to sustain the high levels as well. Sorry. What else? If there is anything else in regards to oil? I think I covered everything in regards to oil, but yeah, it's everything. Um, so I cannot see any further questions. Not sure. I've covered everything. If there's nothing else that you want to ask me, actually, let me check also Facebook. Maybe we have some questions over there. Let me check. Check Facebook. Come on, Facebook. To see whether we have any questions. We do. Euro New Zealand, as Stuart just informed me, from Dodiga Michael. So, yeah, Euro New Zealand. Euro New Zealand. Okay, so we was RBNZ this week, increasing rates by 50% as it was by 50 points as it was expected. This is the daily Euro New Zealand, sideways, very neutral outlook. So we shift straight to 1 hour chart. But anyway, have in mind that euro is in a recession, is one of the weakest currency of the last year. So um, and there is a big yield differential between New Zealand and Europe. So this is something that could negatively affect the Euro New Zealand in the long term. For the time being, it's neutral, okay, it's sideways, stuck around the 10 and 20 day moving average, okay, so sideways for the time being, but supported. Let's see the 1 hour chart. It bounced. It bounced. Actually, it drifted. That big drift. It has to do with the increase of interest rates. Okay, but quickly get back higher. So already recovered nearly the 50% of the decline that we have seen this week. Yes, it did. Yeah, that's why it's struggling. It's actually consolidating around this 50%, but we can see that it's for 4 sessions in a row above the 50%. Also, the Bolligers have started to expand. How you see that? They started to expand. Fast moving average, they are like pointing to the right hand side, so that implies consolidation, but the asset has managed to break this double fractal, the 50% retracement. So there are more positive signs over here than negatives. Okay, so what do we have over here? Higher lows for RSI, higher lows for stochastics as well, rising MACD. So the momentum intraday for Euro New Zealand is improving, is positive. So next key resistance area is at 165.90, not solely because it's a 61.8 Fibonacci level, but it's a floor, it's a resistance that we have seen this week, actually on Tuesday as well. A break of it could turn the asset back to the upside. But in general, due to the interest rate differentials, fundamentally for the long term, Euro New Zealand could depreciate considering the differentials between the RBNZ and ECB. Okay, so have this in mind for the long term picture. How related is pound to Ukrainian Russian fight? A lot. Not directly, not directly, not the Japanese currency with the Ukrainian war, but let's not forget that Japanese currency, okay, yen, is a risk, is a safe haven. Dollar yen is a safe haven. So it reacts at every risk on or risk off that we have into the market. Okay, this is it. This is a risk sensitive asset. It's a safe haven. It's a risk sensitive asset. That's why we have all these ups and downs all the time on yen. It's a safe haven, such as the dollar, such as the gold. Okay, so let me find my dollar yen. Here we are. Okay, so we have this pullback. You see, this is a daily chart, and this pullback has been seen since the beginning of the year. So the beginning of May. Sorry. What was I ready to say? Yeah, it doesn't have to do directly, as I said, with the war, but with any geopolitical concern, fear, any politics, anything that triggers the risk on and risk off mode of the markets. It has a direct impact on the yen, the dollar yen. The yen is a safe haven, it's a risk sensitive asset, as I already told you. So this is pretty much it. It has to do with the sentiment. Okay, so yeah, we have seen just 1 hour chart here. We have seen the dollar yen dropping to 126.50 yesterday and this morning in the Asia session. That means strong yen, and it had to do with the risk appetite. If the risk appetite, we have a risk appetite, then yen tends to be stronger. That's why we have seen a strong yen but a weak dollar. If we have an easing of the risk appetite, a risk off, then we have a lift of dollar yen higher, so a weaker yen. So it has to do with the sentiment, as I already mentioned. So where we're standing in regards to the yen, since you asked about the yen, what we have over here. What we have over here is it was a strong pullback, which it was supported on the week's low area, but weekly turned up. Let me get rid of this, okay? Quickly recover, went up above, prior the data came up above the 20 period moving average, retested the 127 number, 127 round number, but quickly turned down again. So So because the data from US yesterday and today disappointed, okay, yesterday was durable goods, today was GDP and PCE and jobless claim. So because they disappointed, the data have added to the worries over the slowdown in growth in the US. So that implies to a pressure on dollar. That's why we have this reversal. You see, this reversal over here, and this very in directionless candle. This candle over here, guys, this is a 30-minute chart. This candle is not a bullish one, it's directionless one. Why? Because the low leg with the upper leg, they are pretty much the same length, and the body is nearly in the middle of the whole candle. So this is in directionless. This doesn't show direction. Okay, so we need to keep an eye. I will just put it exactly on the bodies. Why I'm saying that? Because because a closure of this 30-minute candle or even 1 hour candle, okay, a closure below the 127 level could imply to move back to the lows and the 126.60 territory. While a turn back higher and a closure close to 127 17 or even higher, it could imply to the extension of this rebound. Okay. So that was pretty much it. If you don't have any further questions, I will scan a bit the markets to see whether there's anything that I missed. We had a solid open, as you can see in the stock markets. Okay, USA 30 posted another high. So extending gains. Let's see the USA 100 over here. Let's see how is it going. Yeah. Oh, a reversal on the open for USA 100 for Nasdaq. Reversal. So it will be key to see whether it will break this lower line of our triangle. USA 500 in the meantime. What we have over here, yeah, also in a pullback, but remains in an upwards channel along with the USA 30. So the only one that is under pressure significantly is the Nasdaq one, the heavy tech Nasdaq one. Where is it? Here it is. What else? What else? Yeah, we have yeah, that's pretty much it. So attention now is pretty much on tomorrow's data. So we have inflation number out from Tokyo tonight, and we have PCE, one of the most favorable PCE in Michigan, one of the most favorable data for the Fed tomorrow. But that's pretty much it. So if you don't have any further questions, I will call it a date, okay? Because I'm already more than an hour live. I think I replied to Facebook questions as well. Aussie, no, I didn't. Peter asking about Aussie. Okay, thank you, Stuart. Aussie. Let's start with the daily. A bit of a struggling the last 4 days to extend gains. Negative momentum remains the case overall in the long term. So what is key right now is to figure out whether it will get back. So for the time being, it's consolidating. You can see that. Flatten Bollingers, flatten moving averages, sideways for the last 4 days in a row between 0.7030 and 0.7130. So what we should wait and see is either a breakout above that level or a move below that level. A move below that level will imply to the continuation of this downtrend, while a move higher, it could bring into attention the 70 to 60 resistance as the very next resistance area. That was the overall outlook. Intraday now, what we are having. round top consolidation, round down, sharp down. Okay, let me check. Up, up, up. It looks like okay. If I zoom in, we'll put to the okay. I will focus intraday on this 30 minutes chart. Why is that? It's because it looks like a head and shoulders, but incline one, an increasing head and shoulders. Let's see. So, bum, bum, sorry, bum, 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 bum. Is it? Not really sure. So we have these three up, up. Yeah, it's not exactly, it's not a precise head and shoulders, increasing head and shoulders, but okay. No. Okay, so we have a reversal the last last few hours. Momentum is MACD is at zero, stochastic oversold and trying to recover. RSI at 47 and trying to recover. Can you see that it's trying to recover? It's turning back higher. So it looks like it has run out of steam. The decline has rather not run out of steam. So, my dear Peter, intraday, you should keep an eye on the 0.7070 territory and on the, okay, here we are. Actually, I'm going to get rid of that. And on the return back above the 20 period moving average. But yeah, I'm in the 30-minute chart, and what I can see right now is neutral. So keep an eye on the 70-70 and on whether it will bounce and extends above the 20 period moving average. This could imply a turn to 70.97 or even higher, but very neutral for the time being. So yeah, nothing exciting yet. So that was it, guys. Yeah, I'm gonna call it a day, I think. Aussie is done, Euro, New Zealand is done. No further news as I can see, other than Bitcoin, which I just seen in the just noticed in the news feed, in my news feed, that it has a new low. Okay, no one asked about Bitcoin. Apparently, there's some kind of a volatility over here, extending losses. Um, Extending losses the last 30 minutes. So let's see what's going on. Yeah, let's put the daily chart. Okay, move back to the floor that we have seen. So what's going on over here? So back to 12th of May lows at 27 barrier. Next low is at 26,660. So Bitcoin breaks lower, breaks below swing low floor. That's the hourly chart. It looks like in the hourly chart we have seen some kind of an extension of the downwards movement that we have seen in the European Open. So extends losses, MACD aggressively negative, RSI down, stochastic down. So there is it seems that the buyers turn into sellers in this 1 hour chart for Bitcoin. So next floor is back to the 11th of May and the 26,658 floor. That's the next resistance support area for Bitcoin, which started gaining some negative momentum over here, some bearish bias. That's the next support level, guys, in case you're interested about cryptos. So that was pretty much it. I'm gonna call it a date. Thank you for attending. Hope you're having a great day ahead. Take care, and see you again tomorrow. Stuart is gonna have a Facebook and YouTube live as well. So you're gonna see us again tomorrow. Ask anything you want, any asset you want. We are here to help. Thank you very much. Have a great day ahead, and see you again tomorrow. Bye bye.